Hey everybody, Gary with Basecamp Trading. Let's take a look at gold futures. Gold, the volatility is just crazy in gold. This is a 10-second chart. And last night, this was actually during the London session, but just an example of how volatile gold can be. Gold dropped from a high of 1903.30 to a low of 1875.10, a little over $28 in less than 10 seconds. Again, that's a 10-second bar right there. And that actually dropped less than 10 seconds and then it made a pullback, but it actually dropped a little over $28 or $2,800 per contract in less than 10 seconds. That's some crazy volatility, but presenting us with some nice opportunities. Here's our 240-minute chart in gold. And you can see we had this shooting star right here, finding support right at the 50 EMA. We know the 50 and the 200 EMAs are often significant support and resistance zones. Triggered that shooting star, broke underneath support, came back, retested it, and then just proceeded to tank right through the overnight and right into the session during the day today. Triggered this bullish inflection or bearish inflection right here on the 240-minute chart, and gold just tanked. I mean, headed lower, ran down the 200 on this bar, back above it. Again, we know 200 is a big deal. Broke underneath it, closed, and then again went through the overnight right into the U.S. session today, and gold just dropped like a rock. Here's our 30-minute chart. You can see nice, strong, bearish chart right throughout the day. Right in here was our US session. We had this real bearish bar bouncing off of support at the 13 EMA and then was triggered by a really strong bearish bar, and gold just made a nice strong move down, got a little undervalued, pulled back, consolidated, set up the bear flag, and continued to make another rip lower today. And again, gold was just really bearish most of the day. Finally got really undervalued on the 240s and the 30s, and then just kind of chopped sideways for the rest of the day. And again, we get significantly undervalued on the 30-minute chart or the 240s. We know that generally we'll get a pullback, we'll go into consolidation, or we'll reverse. Typically what we get is a pullback and then go into consolidation, and you can see that's how that happened as well. This was the setup we had on our Renko chart. And now we had non-farm payroll this morning. And of course, the markets get real crazy during non-farm payroll. And we usually wait for 30 minutes to an hour for that to settle out. Because you can see right in here is where non-farm payroll was released, and we shot up, and then we shot down, and then we shot back up, and then things finally started to settle out here. You see we had a trend reversal breakout back to the downside, broke the cloud, and then set up our wick out of the cloud trade. And again, this is one of the trades that we really like. Our trend was established. We had a downtrend. We broke the cloud, pulled back into the cloud and into the moving averages, everything in alignment, 18 under the 34, under the 50 SMA, under the smooth 50, and wicking out of the cloud. Nice momentum reset, so plenty of room for momentum to send our trade lower. We knew already that we had a very bearish 240-minute chart. We had a bearish 30-minute chart, and we know that those are the times where it's reasonable to expect some larger moves. Now, you don't always get them, even though you're in confluence, but we do know that this is the time where we have the potential to catch some really nice moves. Our initial target was actually down here at 1863.10, and gold actually went way below that before the day was over, but that was our initial downside target. Had our wick out of the cloud. Entry on that was underneath 1885.20. Target was down here at 1863.10. And if you're using Trader Pro 2.0 to manage our trades, you can see we never got taken out till we got down in here to target. We hit target. We definitely had some bullish divergence on momentum at that time. So we know that's a good place to definitely consider taking some profits. And that was a nice rip down. I mean, you had the potential to make over $2,200 per contract. Now, again, it depends on how you're trading it, what your profit targets are and what your tolerance is. But again, if you had traded down into target, you had the potential to grab at least $2,200 per contract. Now, again, gold was so bearish and it just kept working its way lower. We had this wick off the 34 that pushed down, and then we kind of went sideways for a while, and then continued to work our way lower. We triggered that 30-minute bear flag, and gold just tanked throughout the day today. But our initial trade was a nice setup. Again, we were in confluence. We had a bearish 240-minute chart. We had a bearish 30-minute chart. And we had a bearish Renko chart. Again, we were making lower highs, lower lows, broke the cloud, pulled back in, made a wick out of the cloud. Again, we know that this is one of our favorite setups right here. Everything in alignment, making a wick out of the cloud. We like entries out of the cloud because we know that often, not every time, but we know that often the larger moves will initiate from the cloud. Now, not every move out of the cloud is a large move, but the large moves tend to initiate from the cloud. So this was a really nice setup. Again, confluence with our higher time frame charts and a nice Renko setup for potentially grabbing up to $2,200 in gold.